Hello and welcome to BQ Prime. I'm Monal Sangvi and our guest today is Mr. Nitin Agarwal, the Managing Director and Head of Institutional Research at DAM Capital. Welcome to the show, sir.
Thanks, Monal, and thanks for and good morning, and thanks for having me on the show today.
So Nifty has made quite a high last week, and one of the sectors that prominently saw a run-up was pharma. It's right in the center, gaining focus. So, what exactly do you believe has led to this positive commentary around pharma? There are a lot of trigger points, of course, strong results of the companies that have already come out with their earnings last week. But what is typically aiding this sort of positivity around the sector? I mean, overall, the return has been pretty negative. I mean, if we look at the last couple of years, except for the COVID year. So what now is changing this sentiment towards pharma?
So I guess there are two things. The way I look at this thing is if I were to broadly look at the sector in two parts, the domestic and the exports. Domestic consistently has been a very steady story. What has changed in the domestic essentially is that we had a listing of Mankind Pharma, which was the listing of the first large, probably standalone, almost standalone domestic business in the market in the past hasn't had an opportunity to sort of trade a pure domestic formulation business name. And so that business got it got re-rated post it got listed, which sort of indicates the premium market is willing to pay for a pure play standalone domestic listed business. And that I presume has had some rub-off effect on multiples for other domestic focused franchises, right? So that's been one part of it. The other part is there's been obviously the bigger story which has been on the generic export side, especially on the US side. I mean, generic exports, as you know, it has been struggling for the last 2 years, as you mentioned, after post-COVID. Right reasons, and most of the weakness has been driven by the US. And the US, I think things are beginning to change at the margin. I mean, structurally, there were two issues impacting the business in the US. One is, there was a consolidation at the distribution end, which stays as it is. And the other bit was, because of this consolidation of the distribution, there was an aggressive pricing erosion which was happening in the US market, over the last year and a half in particular. Now, what has begun to change on that account is we've seen some easing off happening on the competition in the US, right? And since US is a commodity market, easing off competition essentially means some reprieve on the price front. And that leads to improvement in the dynamics for the generic business. And that is a commentary we're hearing more and more from companies now, that there is signs of improvement, easing off the competitive pressures in the US, which is leading to improvement in profitability for the US business, on an ongoing basis. It is not a dramatic change, but it is gradually getting better as we speak.
So I believe Cipla also came out with this story, but on how the pricing pressure in the US could be getting better because of lesser competition. But I have one question there. Dr. Reddy's, which came out with its result last week, and of course we saw the stock not react despite the strong results. And if we were to look at its disclosures in the US, we realized that there's a lot of growth that came in from Revlimid, the generic version, and not in the base business. So while, of course, Cipla doesn't make those sort of disclosures, so we do not know how its growth was supported and to what extent was it supported by the base business and Revlimid. What is the sense that you make? I mean, is it just that these specialty products are going to give a leg of growth for a couple of years? Because everybody's talking about better margins, but is that what the distributors are actually seeing on ground, where they're ready to pay more? There was a lot of talk about how there's drug shortages in the US, but also that the US policies are not typically changing as much, which is why there's always this discord that, while, of course, we've seen price erosion moderate a certain bit, there's still a lot of, people are not sure whether it'll go back to the original levels. So would it still be as lucrative?
So you're right. See, what is not changing in the US is we're not seeing a dramatic change which is happening in the business, right? What the changes which are happening on the margin, right? Now, what has happened is over the last 6 odd months, FDA has gone out and given issued import alerts on a bunch of manufacturing sites. And I guess whenever import alerts are given out, it has implications on supplies from those units, and those in turn start to create some supply challenges. And when these supply challenges begin to come up, and they're increasing over the last couple of quarters, even the buyers tend to be a little more sensitive about supply security. So there's a So there is this probably this at the margin incremental willingness to pay better pricing or not to be so aggressive with the with sort of negotiating with the generics. So what's happening is some bit of pressure is easing on not the entire portfolio, but in products where there are maybe suppliers constraints coming through. So it is not to say that if someone's selling 100 if the 100 products being sold in the US, you're seeing price improvements happening across the entire 100 products which are being sold. It's only in products, specific products, where there are maybe some supply pressures which are building through. Okay. And the point that you mentioned, and it's purely a function of the portfolio of various companies in terms of the proportion of products where there is some supply situations building out, and how companies are positioned to leverage from that. So it's going to be company to company, depending on the portfolio that you have, which is facing some of these supply challenges.
Then that brings me to another question, because we've seen the whole of Nifty Pharma run up, that is company agnostic. So do you believe that sort of run was legitimate? I mean, or do you see some correction then coming in because it's already run up? And certain stocks who will maintain their levels of the new heights that they've made, while the others correcting? How will it be?
So in the in pharma, what's happening in the large caps? See, the export story that you talked about, I think export story in India is more of a large cap story. Yeah, it is mid caps are largely driven by domestic sort of theme. Large caps have a larger exposure to the generics. And other factor apart from what we discussed on the shortages is at least 3 or 4 of the large cap companies have a tailwind of Revlimid earnings, right? Yeah, Revlimid as an opportunity to our understanding is going to be there all through FY26, right? So there is a 2 to 3 year window of very strong tailwind coming in from Revlimid across 3 or 4 of these names. That gives you an additional delta or that tailwind for the earnings for the large cap companies, right? And in this market, in any market, a 3 to 4 year visibility of earnings is a reasonable visibility, right? And market in the past was a little maybe unsure about how Revlimid is going to play out. But the fact that Revlimid earnings have been holding up so far, I think there is this incremental comfort that you'll see a reasonable delta on Revlimid continuing through FY26. So the large caps have getting that benefit. And when large caps move, typically, the sector, that pretty much starts moving the Nifty index to the Pharma index to an extent.
So the key takeaway here would be that we have to still look at individual names and how it's performing for every company.
Oh, yes. It's a very, very portfolio specific situation in terms of as I the Revlimid tailwind one for one, and 2, on your base portfolio, what kind of new launches you're getting through and what kind of opportunities you're getting on supply shortages.
Now, so if we wanted to understand pharma mid caps and small caps, how are we to look at them? What sort of portfolio? A lot of pharma companies are now looking at other branded formulation markets. They're talking about how going to other geographies apart from the US could also be a lucrative opportunity where they'll get a solid regular growth. So how is it that you view this? And what do you think should be looked at when you're looking at mid caps and small caps there?
That's a valid point in terms of people beginning to look through beyond the US, but also the reality is US is a key market for everyone because it's the single largest market in the world. Right? When you try to get into markets outside of the US, very few markets offer the scale to build up meaningful businesses. Right? So while companies can try to build businesses outside of the US, it's not easy to get scale in an individual geography. So on an aggregate, multiple geographies put together will make for a reasonable size ex-US business. But it is not. It's going to take its own time. It is not. There is no easy fix. Relatively speaking, getting a scale in the US is far more easier than trying to get scale in a non-US exports market. It's a valid opportunity, strategic plan path to take, but it's going to be a gradual. You can build that business only gradually.
So, if you could give us some insight on how would you look at pharma in the near term, medium term, and over the long term? What sort of companies would you prefer? What sort of profiles of companies would you look at if you were to stay invested?
So pharma domestic is a cleaner story, right? I mean, there's 3 parts to it. There is a domestic story. That's probably the most secular story at this point of time in the sector, with a relatively long sort of visibility of growth with limited fluctuation. So that remains pretty much the best sort of theme to play into. Apart from that, companies which are strong in the US and who have a cost competitive offering to participate in the US generic story also have a long runway of growth, because all said and done, pharma consumption will not come down, right? it's that companies need to be in a position to compete in that in a more cost-effective manner. And the third is the companies which are playing in contract manufacturing for innovators. So these are the three planks that we are more positive on: pure domestic stories, generic companies which are very competitive on costs into playing into the US, and third is companies which have a play on contract manufacturing opportunities which can come up from innovators.
So I have one question on the domestic formulations. There's a lot of talk around trade generics with the Jan Aushadhi stores multiplying, people in the tier 2 to tier 6 cities kind of preferring trade generics, also with big companies entering the market. There's Cipla and Alchem, which already had their presence in trade generics. Now with Dr. Reddy's coming in. How do you see this is going to change the market? Because the kind of margins that you get on a branded formulation versus a trade generic, I believe, is a more volume oriented game. So how do you see the story panning out in the long run for India?
It is something that we honestly need to keep an eye on. Just that the way things are, transition is not going to happen overnight. It's going to be a very slow transition that happens. What companies are doing is they're keeping an eye on this transition. So they want to be sure that they are present in that space if that space actually takes off. But there's nothing to suggest right now that the trade generic growth is going to meaningfully overpower the branded generics growth which is there. The industry will continue to be dominated by branded generics for a while to come. Trade generics as an opportunity will become bigger than where it is. But I don't think it's anytime going to overtake the branded opportunity anytime soon.
And so overall, how would you look at pharma, since you look at the whole gamut of sectors, where would you place pharma on your scale of ranking? It's obviously run up right now, but is that your opinion also going forward? Because usually pharma has been more of a defensive sector. And while the market's running up, it's very strange to see pharma do extremely well. It's sort of digressing from the usual trend. So how do you look at this sector?
So, as I mentioned, what Revlimid has done is, it's given at least 3 or 4 of the large cap companies very strong visibility of growth till FY26. And then there are companies which don't have Revlimid. They've got some other interesting launches coming up for them in the US. So all in all, I think that the export business, especially for the large cap companies, is extremely well placed for the next 2 to 3 years. So the earning visibility on the large caps in particular is very strong. And since the mid caps are primarily domestic focused businesses, and there is again a reasonable steady growth in that, the steady growth visibility which is there for the mid caps also. So all in all, multiples aside, right? Multiples essentially becomes more of, in terms of how further multiples can stretch is a separate story. But purely from an earning perspective, the sector is pretty decent shape. There is reasonable earning visibility for most of the companies in the space for the next 2 to 3 years. And in an environment where I think the market is getting has moved up the way it has moved up, and the concerns on earning visibility in sectors, at least on that front, pharma is reasonably well placed. There is reasonable earning visibility across most of the companies, and then it becomes a function of what kind of multiple market is willing to put on the earning visibility.
Thank you so much, sir. This really helped us understand the sector far more. It was a pleasure speaking to you.
Thanks for taking me up, and thanks Mol for your questions.